Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 12th of October 2019 and we're providing our gold and silver weekly update for the weekend in the 11th of October, including some of the factors affecting their price this week and of course the Chinese trade talks. Gold fell $15 last week from $1,504 to $1,489, having hit a high of $1,517 and a low of $1,474. In sterling terms, gold finished the week at £1,177. That's down quite a significant £43. And in euros, it closed at €1,347. That's down €22. Silver remained unchanged at $17.56, having hit a high of $17.95 and a low of $17.28. In sterling terms, it closed at £13.89. That's down 35 pence. And in euros, it closed at €15.89. That's down €0.09. The gold to silver ratio fell from 85.7 to 1 to 84.8 to 1. The Dow Jones closed on Friday at 26,816, up 319 points on the day and up 243 points on the week, reversing last week's loss. And the Nasdaq closed at 8,057, up 106 points on the day and up 75 points on the week. And the S&P 500 closed at 2,970, up 32 points on the day and up 18 points on the week. Brent crude closed at $60.51, up $2.14. And WTI crude closed at $54.70, that's up $1.89 on the week. The dollar index stands at 98.30, that's down 0.50 on the week. So we had a slight fall in gold prices and a weakening dollar at the same time, which is interesting. Gold initially fell last week and into Tuesday, but when the producer price index for September was announced, showing a negative 0.3% compared with a positive 0.1% forecast, gold prices reversed direction and remained buoyant in positive territory until Thursday, and then began a decline and further declined on Friday. Towards the end of last week, which suggests the reason for gold's decline, there were a number of positive intimations and comments concerning the China trade talks, culminating in President Trump announcing yesterday that, quote, negotiators had reached a Phase 1 deal that would include increased agricultural purchases and address financial services and technology theft, unquote. And he agreed to suspend its next tariff hike on Chinese imports. Stock markets, of course, rose on the news, while the fear factor demand for gold subsided. And we saw gold fall back to its lowest level for the week, though towards the end of the day regained some losses, in that it became clear that this potential agreement was, to be fair, limited in scope, and probably just the first part of a longer process. Now, in addition, the Consumer Sentiment Index for October was also announced on Friday, showing a figure of 96 against expectations of 92.5, thereby suggesting that the fear that the recession or potential recession is already biting or harming households is not as yet confirmed, and consumers are still positive for the future. We also saw last week, from the Fed or FOMC minutes revealed on Wednesday, that the board is somewhat split over the next move in interest rates, and that a rise in October is not a foregone conclusion. So all of these aspects provided a headwind for gold prices. Technical analysts on the back of this news are now at last beginning to agree with our forecast that we should expect to see gold reach 1450, which we've been stipulating for the past 4+ weeks, and came very close to it just over a week ago. Now for the week, gold is down 1%, with resistance at the 10-day moving average of 1494, though frankly we see the greatest resistance at 1517, last week's high. The fast stochastic is printing in the middle of the neutral range, and most other technicals are suggesting consolidation. Now, something to bear in mind and not forget about is that import prices, excluding oil, rose last month by 0.2%, against expectations of no change. And the August figures showing a decline were amended to show less of a decline. Now, this suggests the potential for inflation moving forward actually existing, even though the core CPI figures announced on Wednesday showed September standing at 0.1% instead of the envisaged 0.2%. Now, this could potentially contribute to causing the Fed on the 31st of October not to raise rates, if they feel that inflation is potentially coming back into the system. But admittedly, there's still a host of additional data to be declared before then. So we cannot make that prediction as yet, but let's just keep this in the back of our minds. Now, looking at silver, it performed a little better than gold, even though it remained unchanged for the week. It, like gold, initially fell, rose sharply midweek and fell back again. Thursday attempted a recovery and fell back on Friday, though once again closed above Friday's lows. There is no doubt that $18 is providing quite a strong resistance or ceiling, and $17.50 and then $17.25 a strong support or floor. Now, we mentioned last week that technically a wedge is forming, and a number of YouTubers jumped on the bandwagon stating that this means we're about to see a major spurt in the price upwards. Perhaps we should educate those YouTubers. A rising wedge is a bearish pattern that begins wide at the bottom and contracts as prices move higher, and the trading pattern narrows. A falling wedge is a bullish pattern that begins wide at the top and contracts as prices move lower. However, and this has to really be borne in mind when we listen to technical traders, these are not foolproof. They're not guaranteed 100%. Our experience of wedge trading has, to be blunt, been more of an indication of a breakout as opposed to direction. Now, that said, yes, in the majority of cases, the conventional rules apply. But there are other factors which cause that rule to break down. And with respect, we won't go into that because that is part of our proprietary system, which has so far enabled us to make more accurate calls than almost any of our competitors. So we would be a little foolhardy to reveal the detail. But it would be fair to say, however, that we shall see silver move from current levels very soon. Not necessarily in a day or so, but shortly. But before one becomes too excited about this, we foresee a downside of between $1 and $1.50 from current levels and an upside of $2 to $2.50, with, at this moment in time, the downtrend being potentially more likely in the very, very short term, unless the geopolitical landscape worsens. So let's take a look at the economic data which could impact gold and silver prices. Well, on Monday there's nothing scheduled, and on Tuesday nothing of any serious consequence. Wednesday we have the retail sales figures for September with expectations of a 0.3% rise. Now, if the figure is greater than that, then that will buoy stock markets and potentially harm precious metal prices. And equally, if the figures fall far short of that, the opposite may occur. Although, if they fall short, and this is where the balance has to be taken into account, stock markets then may regard that as a sign that interest rates will be reduced on the end of October, and that could actually help them, ironically. although the natural trend would be to expect it to fall slightly. On Thursday, housing starts and building permits for September is announced, and this is the more important one, industrial production figures for September. So do watch out for that one on Thursday. And then on Friday, we have what's called leading economic figures. Nothing is going to stand out there, we suspect, unless there is an errant report. But our major focus for next week or this coming week, retail sale figures on Wednesday and the industrial production figures on Thursday. Now, as well as having the FOMC decide interest rates on the 31st of October, we'll also have the day before, the 30th, GDP growth for quarter 3. And this is expected to show a growth rate of 2.1%, up by 0.1% on quarter 2. Now, in case we fail to mention this again, watch out for this one, as it could have a bearing on the Fed's decision, if it's out by a lot. Now, if it's what market expects, then it just goes into the mix. Now, this coming week, in terms of our YouTube output, we have a number of fascinating videos, or we believe are fascinating, coming out almost exclusively on silver. So please stay tuned. Now, this past week, we diverged slightly on other issues, but with intention. But we're now witnessing even supporters of ours coming out with huge silver price growth forecasts. And frankly, in our view, they're way off beam. There are, in our view, only 3 events we can foresee silver prices rising dramatically to. And by that, we mean by $5 or more by the end of the year. Let alone the more outrageous $30 to $100 growth forecasts we've seen some people predict. Now, these 3 issues are contained within the following. 1, a military conflict. If the Middle East situation worsens and dramatically, then yes, the fear factor will push gold and silver prices up. 2, a global economic crisis within the financial service sector. We don't actually see one occurring this year. There are tensions, there are stresses, but we, based on our knowledge within the banking fraternity, what we are told both privately and publicly, and what we can calculate ourselves, we simply do not see this major crash that some of the pumpers are calling. If we are wrong in the final analysis, then we'll hold our hands up. But to be candid, by the end of the year, no. And 3, a considerable reversal in trade, thereby increasing the industrial demand for silver. Now, certainly the trade talks, if they're successful, will help silver prices in terms of demand potential, but then will adversely affect them in terms of the fear factor purchasing of precious metals. And then once again, it's a balance between the 2. So short of these, then we're afraid the pumpers are going to be disappointed. A couple of dollars move is quite possible, but beyond the figures we quoted in our end-of-year assessment, and we've put a link below, we suspect you'll be sorely disappointed if you believe anything different. Now, finally, we've been asked by some of our subscribers why we haven't focused more on the Trump impeachment process. Now, our answer, to be fair, is that this whole subject is not only highly divisive, as we have those amongst us, amongst our subscribers, almost in equal measure, those who love Trump and those who detest him. But more to the point, and perhaps influencing us more, the process of this impeachment, the process, is not really going to have any significant impact on gold and silver prices. Now, if, however, we're on the verge of impeachment and he is likely to be removed by the Senate, if that were ever to come about, which we're not convinced, but if it were to happen, then that's another matter. The losing of a president will cause destabilization. and then we would include it. Otherwise, whilst it's important politically, and for those of us fascinated with politics, it's daily bread and butter, until there is a more predictable conclusion, it's more of a sideshow than something that will have a direct impact. Now, what has had more of an impact on precious metal prices recently, at least as far as the UK is concerned, has been the Brexit negotiations. As the 31st of October looms and the potential of a hard Brexit diminishing, because of the so-called Surrender Act negotiated in the British Parliament and the progress that Boris Johnson seems to be making within Europe, although at the moment it's not confirmed, we have actually seen sterling strengthen against the US dollar. For it was only 2 months ago that sterling had fallen so much that it equaled $1.19. But since then, it's now standing at $1.26. Therefore, this strengthening of sterling has caused the relatively large fall in gold, particularly, and silver prices, in sterling terms, which is one of the reasons why we cover Brexit in so much detail. Now, so as far as next week is concerned, we suspect a trading range for both gold and silver, but with a slightly downward bias or impetus, unless, of course, more negative geopolitical news comes out. But if the news remains positive and the China deal looks credible, then there is little to advocate gold and silver rising dramatically. But we do believe there will be a silver breakout soon. And when we're confident of which direction that breakout is going to be in, and don't naturally conclude it's going to be up, we will surely notify you. Now, until then, have a most pleasant weekend and prosperous week ahead. And if you haven't already done so, please subscribe to this channel and pop over to illuminatisilver.com and sign up as a free or paying member. And finally, in the early part of this week, we mentioned a new channel which I, the narrator, is involved with, called Christian Life. It is a religious channel, it's not for everyone. We fully accept that. But if you are of that religious persuasion, then please pay us a visit. And again, we'll put a link in the description box below. And Pastor Norman, who has been, in his case, a born-again Christian pastor for over 20 years and runs quite a successful pastoral church in the United Kingdom, will be producing various prayers and sermons on that channel, while yours truly will be focusing mainly on the Bible reading and also on interesting historical, both religion and institutional religious events. Thank you for listening. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.